0.
Yeah, hello everybody. I hope this works. Today we have an, I think, very interesting panel about Bitcoin, especially as yesterday everybody thought that maybe Facebook would potentially announce that they also have purchased Bitcoin, which then they have not. But still, I think it's more adoption happening as time is passing. And therefore, we have quite some interesting news here because companies are increasingly thinking of potentially purchasing Bitcoin as a secondary reserve asset. I potentially could imagine that in the future, a company could hold multiple assets as reserve assets, not just one currency, could be multiple currencies, it could be the Bitcoin, it could be all kinds of assets once they are becoming more liquid. And therefore, I think we see the beginning of a widespread trend here. Well, the very early beginning of such a trend, right? And therefore, I'm very happy that we today have real experts here from the field who are operatively working in this field. We have Metaco here doing custody of crypto assets and Bitcoin, of course. We have Börse Stuttgart, where trading venue takes place. We have 21 Shares offering an ETN product out of Switzerland. We have Iconic Funds doing exactly the same, recently being BaFin approved 2-3 weeks ago, right? And we have Capco here as a company advising large-scale financial organizations who might not have entirely been into crypto yet. But I think it will be interesting to hear from Capco whether there are increasingly coming up interests and demands by large-scale financial organizations to do so in the future. So therefore, I would propose that everybody quickly presents him or herself very quickly. And let's start with ladies first. Sina, would you like to quickly present yourself and the company?
Let's do it, Philipp. Thank you so much for having me. So I'm Sina. I'm from Switzerland, like we just mentioned before, and I've been in the financial industry for more than 27 years. Sounds long. Mainly in business development and in private banking with clients from all kind of continents. And I've joined 21 Shares in January last year as managing director and head of Switzerland.
Perfect. Let's move over to Seamus from Metaco.
Thanks, Philip. So Seamus Donahue, I'm the VP of Strategic Alliances at Metaco. And Metaco, similarly, we're based in Switzerland, the French side. We offer basically institutional infrastructure primarily for banks to enable them to manage digital assets. We have a new product now called Metaco Harmonize, which I'd say is much more than custody now. It's really been an orchestration platform for digital assets. So imagine from custody to trading, staking, contract management, really enables an organization to seamlessly integrate all those into their core infrastructure.
Okay, interesting. Max Lautenschläger. We have two Max here. Therefore, Max Lautenschläger, would you like to take over?
Yes, of course. First of all, thanks for having me today. My name is Max. I'm from Germany, and I'm one of the founders and managing partner of Iconic Holding. My background is in management consulting, in private equity, and in fintech venture capital. With Iconic Holding, we have two different companies. We have Iconic Funds, which is the issuer of exchange-traded products and privately held funds that invest into crypto assets. And with Iconic Lab, we invest into early-stage blockchain companies. And in the US, we have something what we call the multi-manager, where we offer our infrastructure to external hedge funds for the US markets, on and offshore.
Perfect. Then the second Max from Börse Stuttgart. Would you like to quickly present?
Hi, Max von Wallenberg, also from Germany. As you can easily see by the name, Börse Stuttgart. I'm the CEO of Börse Stuttgart Digital Exchange, which is the B2B or institutional focused digital asset exchange. We also accept retail customers. But for this part today, it's very much about the institutional side. We have a variety of brands in our digital asset ecosystem with Bison as our simple and easy on-ramp for casual traders and retail traders. And we have the Börse Stuttgart Digital Exchange, which basically allows institutional customers to open trading accounts for crypto assets such as Bitcoin, Ethereum, Litecoin, and Ripple. And yeah, we look forward to hearing from everyone who wants to get exposure to this asset class.
Excellent, thanks. Carsten from Capco, please also present yourself and your company.
Thanks, Philipp, for having us here. Carsten, my name. I'm senior partner of Capco's Frankfurt office. I'm in the financial service industry now for 22 years, always consulting, only financial services. We as Capco support our clients defining new business models and new services, and also integrating those new business models in existing landscapes that we see at clients. And very happy that we are in the moment in the situation where we support large organizations getting into digital, whatever that means. And there's some definitions for digital. And I'm leading our crypto and digital asset practice here in Germany and Austria.
Excellent. So we have all kinds of all kinds of backgrounds, right? It's one industry. I would love to ask everybody here, except Carsten, how much assets you have under management, but this is probably also confidential information. But if anybody would like to tell us how much assets you have under management, this would be fascinating to know, but we perfectly understand if this is confidential.
Should I go first maybe again?
Ladies first, yes.
Ladies first again. I have even not presented our company because we have many word first. We have actually at the moment we have 1.6 billions. And because I didn't introduce our company, we are not only in Switzerland, we are also in Germany and in Austria. And we have also ETPs, which are listed at different stock exchanges. So 1.6 billions, actually.
Very nice. Anybody else wants to say something? But I guess this is private information, right?
Well, I can say something about trading volumes, maybe. I mean, this is semi-public, or sort of public, because we have press releases. So currently, about 2.5 to 3 billion worth of trading volume has flown in terms of digital assets through the Börse Stuttgart digital asset ecosystem spread over Bison and the Börse Stuttgart digital exchange.
Okay, so if everybody would hodl, then this would also equal assets under management. But of course,
can't comment on that exactly.
I know. Of course.
Okay, but obviously not there. Yeah.
Of course. Let's move on to another set of questions. So everybody of you in the call here, what is your feeling of the industry? Do you see increasing interest from companies, similarly as we have seen it in the US with MicroStrategy and Tesla and a couple of others? Can you confirm similar developments over here in Europe? For example, Max von Wallenberg has Daimler asked you how to somehow get Bitcoins in the Daimler balance sheet.
I'm not commenting on individual companies, but what I can say is that pretty much every day, multiple companies approach us regarding kind of access or information, or just to explore the opportunity of digital assets. And this has really accelerated a lot this year. I mean, we've seen it with kind of the announcements of Tesla, sort of as a bulge bracket firm to get exposure to the market, but also PayPal and other kind of big name firms. I mean, and that suddenly, triggers a wave of corporates and other institutional firms that want to get exposure, or at least want to inform themselves about the asset class. And we are usually one of the first points of contacts, given we're sort of a bridge also to the old world with a known brand. A lot of firms have approached us saying that, like, finally there's sort of a traditional player they can talk to about this asset class. And it's also based in Germany, since obviously there's quite a few exchanges that accept institutions, but when we're talking about German or German-speaking firms, they really prefer a local partner.
Mm-hmm. Interesting. Anybody else wants to emphasize?
Yeah, I mean, for us, we see a lot of demand in our New York office. We have some Nasdaq-listed companies, for example. I can't disclose the names, of course, but who are also interested now. What I find also very interesting is they're a little bit concerned about the drawdown. So for them, actually, certain hedge fund strategy or smart beta strategies might be interesting, because they're a little bit afraid that they would lose overnight or over a couple of months, like 80% of their holdings. So yes, there's a lot of demand, but I think also some caution regarding the potential drawdown of Bitcoin, which makes it a little bit more risky for a balance sheet.
Well, a little bit is really funny, if in case the maximum drawdown is 30%, I really understand that treasurers might not be interested in this, especially if it's not their company and they are just working there as an employee, right? Why should they take this risk? Anybody else wants to emphasize?
Yes, sure.
Yes.
We had 21 shares. We saw also significant inflow from institutional investors. To give you some solid facts and figures, we had in March 2020 about 30 million AUM, and then in December 2020 200 million, and we surpassed like I just told you before, the 1 billion a couple of months ago, and now we are already at 1.6 billion asset under management. So we have about 75% of our clients are institutional, so we are seeing definitely an uprising trend into institutional flood.
And
yes.
Why is this happening? Because is it because potentially everybody by theory and also by practice can purchase Bitcoin right away, store it on their USB stick, and so on. I would expect that the KYC identification process must be horrible for organizations, such that it's not easy to onboard with a direct broker, with an exchange, and so on. Or to purchase custody solutions, and therefore it's probably more easier to simply purchase an ETF, ETP, ET something. Is this assumption right?
Exactly. I mean, like if you're coming back to my question, it's definitely what we are seeing, because there are different solutions, of course, to buy crypto assets. And in general, I mean, I speak on a daily basis with all the clients. We don't know all the time who our clients are because they can trade that through the stock exchanges. But we definitely see more and more people calling, sending us messages, and people also are much more aware what they can do with the cryptos, I mean, like they see this, many of them already as an alternative asset class, and they definitely check around and look what is existing. And an ETP like ours, physically backed, segregated, it's like an ETF in terms of regulations. It's definitely a good solution for many people because they don't want to open an account elsewhere. They can just purchase this with their own account they're having. It's coming more and more, definitely something people looking at.
I completely agree. I completely agree with what Zina just said, because I mean, it's just way easier to book it on your balance sheet, and it's the kind of instruments which people and investors are used to. On the other hand, if you have a company that also wants to get their feet wet regarding the technology itself, I always say, why don't you buy the cryptos directly? Because if you really want to experience the technology, I think it's very, very cool to actually play around with wallets and try a little bit out what is actually happening with this technology. So yes, in terms of security and what people are used to and balance sheet, yes, I would say definitely financial instruments or a trusted broker like Börse Stuttgart, for example. But if you really want to get exposure to the technology and maybe also learn for your own business, for example, in the case of Tesla, to also learn how to, for example, accept payments with it, or how in the future the different cars could pay each other with micropayments, then I think it would be very wise to actually start direct exposure to get access to the technology.
And just kind of to jump in there as well, thanks, Max. I mean, I think the business KYC is not nearly as bad. I mean, it's not horrible, but it's obviously we look very closely who we let onto our platform. So there is quite a bit of paperwork. On the other hand, though, we're really trying to smoothen this process so companies can be onboarded fairly quickly. That's the plan. Also with regards to ETPs versus physical Bitcoin, I think the ETPs are definitely a quite easy on-ramp. I heard, and would love to hear the feedback from the ATP or ETN publishers here, that the costs are something that firms are conscious about, right? Because some ETPs charge up to 2.5% per year in custody costs, and that if you go to a direct exchange or purchase directly, that obviously is orders of magnitudes cheaper, because either you can custody that yourself, or you use, for example, BlockNox, which is our custodian, which is much more cost efficient than ETPs, also in terms of getting exposure. But would love to hear where the developments are. Do we see a fee erosion on the ETP side? I know there's, I think, Bitcoin Zero now by Smart Valer that doesn't charge any custody fee per year, but this is something I particularly would be interested in to see where this development goes.
Yeah, let's discuss this in a second. I would like first to ask Carsten from the side of a consulting company, being in touch with large-scale financial organizations. Can you confirm these developments in your industry, or are you the people you're talking to day by day, larger financial organizations, would they be more interested in the tech side, in the DLT technology, and not so much in the asset of Bitcoin and so on?
Well, I can confirm what Maximilian said in the beginning, that we see from our clients, more and more of their clients, the corporate clients, reach out to them and ask for a solution, actually, to at least get information of the bank would be able to provide any services that would allow them access to crypto assets. And that is usually not only Bitcoin, it might also be other currencies. So what we see is, of course, that large banks or institutions are now looking into the technology itself and how much would it cost them to provide this service as an additional service to the current engagement that they already have in place with their clients. So from a perspective of a bank, it's more an additional service for large corporations that supports specifically, of course, global or multinational institutions. So I think there will always be, from my point of view, a bit of a competition, corporates that connect directly to whatever exchange or via a broker, and those corporates that actually expect that their bank is providing a service to them as part of the overall engagement. But we do see, of course, the initiatives increasing and the number of questions from customers of our customers coming in on a daily basis. So, but as we're more focused on the German market, with all the news around the Teslas and the MicroStrategies and whom have you, it's like the German market is usually very conservative, and there's always the discussion around, okay, there are many positive factors actually moving some of your liquidity into a different asset class. But I think we're just in the beginning where the corporations understand the true value of having the benefits of you having assets in cryptocurrencies and what you can do with it on a day-to-day basis. But it's definitely increasing.
Yeah, good to see. And Seamus, what's your perspective on this? Basically, you are a service provider in the background, I guess, right? Or are people also approaching you directly for whatever reason?
Yeah, thanks, Philip. No, I would agree. I mean, the last thing Carsten said, I think it's still early stages. I mean, our client base has really been primarily banks up to now. We've been particularly strong in places like Southeast Asia and Europe. And we do know a lot of their clients are corporates, and the feedback we've had, a lot of them are now building new initiatives because they're getting both asset manager and corporate interest. But I think the corporate one is relatively nascent compared to the asset management side. But we very much think, we watch the trends in the US. I mean, you saw Genesis reported, I think just yesterday, I think they had something like $8 billion in flows from corporates in the last quarter, up from almost zero in previous quarters. And that was kind of the dominant sort of flow they were seeing. So I think the corporate story is becoming real. There's no question having an ambassador like Michael Saylor has had huge impact on the market. It's resonated, and I think the state of rates being zero or negative in most markets are really forcing treasurers to look at new avenues and how to manage the treasury. So we are looking forward, and we're actually launching really going towards not just large banks anymore, but we're launching a SaaS solution this month. In May. And in addition to that, we really have basically solutions that'll be geared towards corporates and asset managers, such that they have like a multi-custody. We've always been in custody infrastructure as a background. We're moving, as I said, to much more around a orchestration layer for digital assets. What that means is a client could manage their own self-custody infrastructure or multiple sub-custodians. And I imagine the likely case and trading, and the likely case for the corporate is they may not self-custody to start with. They could probably externalize to custodians, but we have also can deliver the capacity to diversify across custodians and full trading tools to manage that treasury. Because I think ultimately, I think there was some disappointment in the market yesterday when they found out that Tesla had sold some of the crypto. But I think one of the characteristics of the corporate sector is it's not a hodl sector. If the treasury is buying this, it's for active management. They may have some long-term assets, but ultimately, it's going to be around managing the asset as a liquid asset on their balance sheet. and they'll need to be managing duration gaps, managing liquidity gaps, and we'll see buys and sells. So they'll be selling as it rallies to rebalance and buy in as it pulls back to get back in. So I think it's a very different client that potentially just one comment could probably impact some volatility, could dampen some volatility longer term. But anyway, we're very much focused on that being a potential client in the future going forward from here.
Yeah, but you just pointed out some very interesting point, because Bitcoin is very often about hodling here and there for everybody out there. In Germany, this is even incentivized by the tax system, you know, like the German tax system is incentivizing hodling. That's very interesting if you see it that way. And therefore, I really appreciate your comment that with corporations, there might be an entire new segment of investors arriving who treat Treasury as a multi-asset and not just based on one currency. We have some questions coming in from the audience. One question would be the minimum investment that can be made by business owners. Actually, I think I know the answer, but what is the minimum investment that can be made by business owners? Maybe this question should be answered by a couple of people from you, maybe Sina, Max, and the second Max.
Do they mean like for the product side, or in general how much they should put inside in terms of the portfolio?
I think a good point is, Sina, I think both questions would be interesting to know.
Okay, so maybe I go first if that's okay for everybody.
Again.
So in general, for example, for our ETPs at 21 shares, there is no minimum amount. There is 1 unit, which is, we just had a stock split about 2 weeks ago. Many people of you might have seen or heard or even have been shocked. And there was, we have about, it's around 20, 25 euros, something like this, like 1 unit. But in general, overall, if you look at the portfolio, in general, what we say, what we think makes sense for a portfolio is between, I mean, depending on the size, of course, and the risk appetite, between 1% and maximum 5%. This is what we are saying. And we saw clearly, we showed in several webinars with external experts for looking for risk side, that this makes totally sense. It increases the Sharpe ratio, even with a small amount like that, in percentage of the portfolio.
Yeah, I could just agree. Sorry, I'm agreeing too much with you.
We're very similar, that's why. We're very similar.
Yeah, it's very, very similar. I mean, basically for our node, it's the same thing. I mean, you can invest basically with €5. But I would also differentiate. I think what is a very important message to all the newbies in the space, you can invest into Bitcoin even with a few cents. You can buy 1 Satoshi. Yeah, I think this is a misperception a lot of people have, that you need to buy 1 Bitcoin. So I think that's not the question anymore. Or this is actually the answer to the question. You can invest with 1 cent into Bitcoin. Yeah, that's it. Regarding the size, I would also go with Sina and say 1 to 5%. We also did a study on the Sharpe ratio, what impact it has if you allocate like 1 to 5% of the index, crypto index to your portfolio, and all portfolio types are benefiting from it. It doesn't matter if you take the endowment model, the family office model, or for example, a Norway model. So I also think like 1 to 5% is reasonable, because you will still get an increase in the Sharpe ratio. But on the other hand, you're not, if there comes a bear market, you're not exposed to too much risk.
May I maybe add something which has not been said yet, because I get sometimes questions like, oh, if I would put like 50 million inside, would I move the markets? I think what many people might not realize how big this market is, maybe just for everybody, the whole crypto industry is estimated to be worth over 2 trillion, with Bitcoin taking over 50% to the market share. And there is more than 300 trading venues, such as crypto exchanges, derivative exchanges, decentralized exchanges, and OTC desks, over-the-counter desks, registered around the world. And with a daily trading volume of about 200 billion. I don't know if everybody is aware about this, but some people, they are not aware about this kind of big figures at the moment.
Yeah, I would just add, I think that was a good point, because I think that was potentially the point that Tesla was making in their shareholder statement yesterday, when they'd obviously purchased 10%, put 10% of the treasury in. Sorry, they'd purchased 1.5 billion in Bitcoin, rallied to about 2.5 billion, and then liquidated over the quarter 10% of that. And I think demonstrating that you can move $250 million in this market. I mean, it's a big change from 2017, 2018. There's no question. It's matured into a major trading market now.
Yeah, interesting to know. Let's move into a little bit of another discussion. Maybe Carsten, in case you're talking with Bitcoin about clients, and also other crypto assets, how is this treated from a sustainability perspective? I think we all hate the energy discussion, right? But I think it's still interesting from a corporate perspective, where companies have to deal with SDG and sustainability targets. Senior managers still might need to discuss this. How is this being solved?
Actually, that is always part of the discussion, but there is no definite solution to it at the moment. So we are expecting, of course, a lot of upgrades and updates in the current protocols, so that they will become more energy efficient. But also, when you look at the clients, is to get back to just on not only the investment. So what you can do and what we see is more the question around how can I incorporate then the digital asset in my day-to-day cash management and liquidity management as well. So it's not only a treasury instrument in regards that it's a long-term investment. So the quality of the digital currency or the digital asset is that it is highly liquid, and most of our clients then think about how can we integrate this in our day-to-day cash and liquidity management as well. So not just only sitting there, also to be very proactive and circumvent any FX exchange risk and so forth. So there are a number of elements to it. The discussion on the cost is, of course, from an ESG perspective, which we all have to look for now, is always part of the discussion. But as far as I know, even the regulator has not yet given out a position how to look at it from an ESG perspective. We only talk about it's not as positive as we hope it would be, but everybody's looking for some solutions that we might achieve with the changes in the infrastructure and the protocols, that they will become more efficient and use less energy. Now we've seen firms coming up, they only use renewable energy for running their nodes and their infrastructure. So that's also becoming a big part of the market at the moment.
Yeah, interesting point. Anybody else wants to add something here?
I would just jump in and say, I think that question is fundamentally a normative question. I mean, I think before you can ask whether it's ESG compliant or not, I think you have to ask, is Bitcoin useful or not? And I think those that typically are most critical of the ESG, sort of the negative ESG aspects of Bitcoin, see no use for Bitcoin. So I think if you say to start with, yes, this potentially it provides a new foundation for a global payment infrastructure, then what's the alternative you're looking at? What is the ESG footprint of the global banking and global payment system? I mean, that's something that it needs to be looked at on a comparative basis, not an absolute basis. So I think it's one we can struggle with, and I don't think there's a good answer to say on an absolute basis, how do we get to be ESG compliant?
Yeah, Seamus, I think that's
I think, Seamus, you're absolutely right with this concern, but companies of the size of MicroStrategy, or let's imagine Volkswagen Germany or Daimler, they are also communicating to journalists and the society and the public and so on, and there the knowledge is simply not there, such that some kind of stigma is happening, even though the truth is maybe something else. Therefore, I perfectly would agree, but I still think there is the risk of this stigma in the society, such that a company can do whatever it wants. The public thinks that it's this way or another way, right? That's a threat, I think. Anybody else wants to comment on this? We have a couple of more questions.
Just Philipp, I completely agree what you just said. Now, I think many times the issue for many people, and we speak in general to CIOs, CFOs, and so on, that the knowledge is the problem, that there is a lack of knowledge about the whole crypto industry and all this sometimes negative news what we read on a daily basis, right? I think this is an issue because we do, for example, we have a research team, and many people, seriously, they didn't follow any research or any what's really going on in this market. So I think the education is the key for the whole industry, to get bigger and to get more confidence in this market.
I also agree, but I also trying to push education. I think we all are, but at some point of time, you also have to simply acknowledge, it's a diffusion which is happening here. The market reach is progressing at a specific rate, and it's difficult to accelerate this. The smartphone also took 15 years to reach everybody out there. Not 2 years, right? Now we have generation 12, iPhone 12, and therefore we. Again, you know, sometimes I think education is good, and I'm also pushing this a lot. But you know, diffusion is happening at a specific speed. You know, you can accelerate it here and there a little bit, but you cannot overtake this enormously. Yeah, but it's a good point. Let's move on to some more questions. What about the volatility? You know, we all know the volatility in crypto markets is huge. Is this a reason where then people who might be interested are then saying, so, oh, I didn't expect the volatility to be so huge. Let's not do it, right? Is this happening? Is this a roadblocker?
Point. Oh, okay. Just
sure. I want to jump in here. I mean, first of all, I think like with rising market cap, volatility will also you know, come down, especially when it comes to like the top 1 or 2 assets such as Bitcoin and Ethereum. Nevertheless, they're still, in terms of cash management, they're very volatile assets, right? So I think to what was said before, like if you invest a very large portion of your daily cash needs in crypto, that's probably not a good idea. So you should use it as a diversifier, right? But always be very careful with regards to like what percentage that is. And you know, you should be, you know, doing your research and make sure that you can and understand you know, the volatility. And the market, yes, is still more volatile than, I would say, comparative assets. But on the whole picture, that's also why a small allocation is probably the right choice versus a larger one. But again, this is really up to the discretion of the firms itself to you know, assess their own risk there.
But what we see when you look at the Bitcoin, the volatility, to also add to Zina, if you have an educated senior management that understands the market and how the market works, it might make sense, because when you look at an investment in cryptocurrencies over the period, specifically over the last 9 to 12 months, and then compare that to the inflation rate that happened. So it totally made sense, even with the volatility of the market in certain weeks that we had, where we had the drop of 10 to 15%, and then see the market recovering over time. But the inflation basically stayed pretty much the same, and we have 0 interest rates or negative interest rate at the moment. So it made total sense actually, to, at least from a diversification, to allocate some of your assets potentially in these kind of cryptocurrencies. So the people understand, they learn, and that's what will take us the next 1 or 2 years actually, to educate the management at firms and provide them information what is possible. And I agree with Maximilian as well. Don't put all your money into cryptocurrencies, whatever you do. So, but a certain amount might make sense based on your business model and your business needs. So, and I think from what I recognize out of the discussions, the more and more people are not that much afraid anymore about the volatility. So they understand that the market, looking from a 6, 9, or 12 month perspective, usually at the moment recovers.
What many people might not know also is that in the 70s, when I go back to the years I've been born, in the 70s there were also a lot of volatility for the gold, for example, and nobody talks about this today anymore. So it might also, like we just heard before from Maximilian, it might, with the bigger volumes and more people coming in, this will probably flatten as well, you know. But it might take another couple of years, of course.
And I would add that the volatility, I mean, it is reflected in the Sharpe ratio. And as Zina and me mentioned earlier, you can definitely see that the Sharpe ratio actually increases. And that's, for me, probably the second most important thing in portfolio theory. The other thing is that with crypto, we have the only asset class that has no significant correlation to any other asset class. So I think those 2 items actually make it perfect for a treasury management strategy, if you do it the way you do an asset management strategy.
And maybe just to jump in there, so maybe not all people know what the Sharpe ratio is. So basically, it's a very simple measure of how much return you generate for the volatility of the underlying asset. And kind of, if you look at Bitcoin and crypto assets, you typically get a bigger return reward for the volatility unit you're taking versus other assets, which is why it makes it a very good diversifier.
That's a very good point, Maximilian, because treasury is about liquidity, right? And the way we are talking now about this is more about asset management. On a higher level, I don't have a clear answer on this myself, but on a higher level, is treasury management becoming some kind of asset management in the future?
Well, I mean, some firms they call it anticipatory hedging, which is nothing else than sort of becoming a hedge fund. If you look at MicroStrategy, for example, they at the end of the day they just became this shell of a firm that now is just a kind of like almost direct correlation with a very high correlation with Bitcoin. So certainly that's a very strange case. It was if you will, a smart move by Michael Saylor, because there was no other way for US investors to get exposure to crypto, which is why he sort of turned his software firm into a holding company for Bitcoin. But that's a very exotic case, right? If you look at like other, I would say, German mid-cap companies, it's probably not a good idea to, become heavy speculator on crypto assets and, spend a lot of time to try to beat the market. If you look at crypto, it should be more a diversifier asset as part of your portfolio strategy, rather than sort of a active daily trading asset. So, I mean, that's my opinion on this.
Yeah, and I would agree. I think the same way we look at individuals like suitability, I think some of the comments here are the same things. I mean, not all corporations are the same, and certain corporations only manage short-term liquidity. And as we said, as an individual, it's probably not great to hold all your liquidity in Bitcoin. It's probably the same thing for a corporation that has, payroll and other account receivables, accounts payables, et cetera, that are basically near term. But to the degree they manage longer term assets as part of that treasury, then there's definitely a case, particularly if that was the option otherwise to invest in fixed income. Now you see investments in Germany and EU broadly, you're getting negative yields on those investments, and you probably have a much stronger case from an investment perspective to manage those assets in Bitcoin, which was ultimately the argument that Michael Saylor did make, even though he's taken it to the nth extreme, as we said.
Yeah, excellent. Yeah, is it about a Bitcoin at the end of the day? If we talk about treasury and potential decisions for a treasurer, right, as we did now, is it about Bitcoin, or would it be also interesting for treasurers to have other crypto assets? Of course, Ethereum and other ones, or even going a little bit further and adding all the other coins? What's going on here? Is it basically investment into all kinds of crypto assets, or is it simply indeed the reserve narrative, the inflation hedge, because then Bitcoin would be sufficient with the high correlation with other crypto assets, right? So what's your insights here?
I would maybe first of all, first of all, this is a misconception that actually the volatility between the crypto assets is so high. That was very, very true in 2017, 18, and also 2019. But actually it changed very much, because cryptos at the end of the day, at least in my opinion, have very, very different value drivers. Ethereum value drivers are completely different from Bitcoin, completely different from Ripple or for Binance, for example. And at the moment, they are correlating between 20 and 70%. With each other, which is less than, for example, the different stock markets are correlating with each other. So I personally believe if you approach treasury management like asset management and long term, then I would actually say you need diversified exposure to the space. If you approach it more like what you said, as a hedge against inflation, I personally would stick to Bitcoin, because I think that's the narrative there.
I think one of the issues is going to be liquidity. All right, the issue with some of these other currencies is you go from $1 trillion in Bitcoin down to 300 billion in Ethereum, and you drop off significantly after that. So I think liquidity becomes a bigger factor moving out the risk curve in terms of other cryptos. But I do think, if things like when we talked about earlier about ESG issues, I mean, that could actually be an interesting driver to a broader adoption, or at least a look into the Ethereum space. Is that space, you've had the recent initiatives there about potentially reducing supply. You've got you've had the large EIB issuance yesterday, so you basically get more corporate adoption about building rails on there. The dark horse basically performer, and the one that actually we could see more corporates move into, I think, could be Ethereum in many ways.
In general, In general, at 21 shares, for example, we go mostly for Bitcoin, to start with Bitcoin. Even if someone asks us for, I mean, we don't give recommendations, but in general, we think it's a safe haven, because in theory, if Bitcoin reaches the market value of gold, then the price for Bitcoin will be more than 500,000. To be more specific, by dividing the market cap of gold by outstanding number of Bitcoins ever created. So let's say 10 trillion divided by 16.6 million, we get the Bitcoin price of roughly about 535,000. So at 21 shares, we believe that Bitcoin has a chance to exceed actually this market value of gold. So in general, we say like Bitcoin is the safe haven, and we go for a little bit, how you say that, a smaller amount for Ethereum maybe also, but in general, we say like Bitcoin is the safe haven. That's our opinion.
Can we take the sound bite of that? Bitcoin is the safe haven. Yeah. So I think
digital gold, you know, that's why.
I think one interesting product we haven't talked about, and this goes beyond Bitcoin, Ethereum, and Co, are stable coins and lending. So for example, if we look at this, I mean, I don't know, for the audience, people might not know what a stable coin is, but basically it's a crypto asset that is pegged to either euros or to US dollars and doesn't move versus that asset. So it's stable. But the interesting fact there is, you can actually earn an interest on these stable coins, and these interests can be anywhere from 3-4% up to like 18 to 20%, and this could be a new asset class, such a fixed income asset class that is already understood by corporate treasurers. But typically, fixed income assets now yield between 0.5 to 1%, sometimes 2%, depending on your risk affinity. And if you open up crypto assets or crypto lending to the crypto industry as a corporate asset class, this can eclipse, largely what we're talking about here in terms of Bitcoin, Ethereum as a part of your more risky portfolio allocation asset in your treasury.
I think this is interesting because with this we have multiple narratives of what's going on here, and well, let's discuss this in the last section of the panel. What is most probably the most interesting narrative in the future? You have the narrative of Bitcoin being a reserve asset against inflation. This goes so far as Sina said that Bitcoin might become indeed something like digital gold, which would lead the price to really increase in the future. Then the HODL technique would make sense. The alternative would be you have the approach of asset management, that you're going in and out of such assets and trying to be liquid and approach the let's call it the total overview of what you're doing in terms of asset management. This would require then more crypto assets being accessible, right? And ultimately, Max, that's the rare case at this point of time. Probably you could also engage in some kind of yield interest gaining activities to basically make some kind of interest out of the money you are deploying into the network. That's the rare case, I would guess so. But what is everybody's opinion here in the room? What do you think is the most probable narrative for a treasurer or a business owner? What is the rationale why they might be doing this? Is it the Bitcoin versus fiat, the Bitcoin versus fiat narrative? Is it the asset management narrative, or is it the interest yield narrative? I hope this got clear. It would be nice to really show a slide here or draw something on a board, and it's easier to understand than just speaking. But what's your opinion here? Maybe Max Lautenschläger, would you like to start?
Maybe I would first like to add maybe one more angle, and one more angle is the stock price. I mean, as was discussed earlier, I mean, Michael Sandner did a very, very smart move, because he increased the stock price extremely by adding Bitcoin. So this could be also an approach. I personally believe at the moment, as a real hedging instrument is not there yet, because we don't export, we don't import in Bitcoin or Ethereum or whatsoever. So I think that narrative is not there. For me personally, if I would own a company, it would be definitely a hedge against the inflation that I would be expecting from the fiat world. So my personal opinion, but in general, I love asset management. I like portfolio theory, and for me, yeah, crypto assets is a wonderful way to diversify your portfolio. So for me, it's both narratives, but I can also see how other companies are actually using it to drive the stock price, especially when they have problems with their core business.
Okay, Sina, you would like to continue?
Yeah, I think for myself, it's a combination of what you just said, Max, before, with the inflation, money printing, then the low interest rate, what we just said. So it's we need to be looking for nothing is generating any yield. So for that, but also profitability, you know, because I mean, like the performance was quite well, and we saw that. I think it's a little bit the combination of everything together, and also diversification, of course. It can be, like I said, different measures, especially now with this uncertain times in Corona. I think it's good to be a little bit hedged against inflation, to have something else in the portfolio, and yeah, to have a different asset class. So it's really a mix, I wanted to say, you know.
You mute. Okay, Philipp, I thought you mute, but I'm just going to continue. So I think for me, I think the next 1 or 2 years or even longer for the treasury part, I think the asset management narrative is the one that will be pursued. I think the thought exercise here is that like corporates think along the lines of, if I invest 1, 2, 3% of my treasury into crypto, the upside of you know, what's being thrown around in the press of 3, 4, 5x where the crypto price could go is favorable, versus the downside case of a 50, 70, 80% drop. It's still, from a risk reward perspective, it sounds like for many treasuries like a good bet. And I think that's sort of the narrative we'll see for the next couple of years. I think further down the line, once, you know, crypto or maybe even decentralized finance takes over capital markets, it could very much shift towards being a fixed income asset and kind of replacing long-term portfolio strategy that at the moment is sort of 60% equities, 40% fixed income, to maybe something like, you know, 50, 40, 10, or like Ray Dalio, who now said like he recommends 20% of a portfolio to be allocated to crypto assets. So I think it's sort of a new evolution of where portfolio theory might go in the next couple of years.
I agree.
Maybe
what's your take on this?
I think as everyone already said, I think for treasury it's not only one narrative; it's a combination of stories, and that we have to look at. And one that we have not yet discussed, that I've been heard in a lot of discussions, is also a mitigation of credit risk. So there's no default risk or anything, depending, because you don't have any fixed income securities in your treasury allocation. So it might make there are a number of benefits that actually come into play here. And as long as I'm not going to give any advice, but I would say that the percentage that we've seen in the discussions is roughly between 5 or 15%, depending on the risk appetite and the business model in general, how much liquidity or short-term liquidity is needed to support your business model. And one element as well is, I've been part of the discussions where we see corporate treasurers also talking about posting Bitcoin or any cryptocurrency as collateral, and then actually get liquidity in fiat currency, but keep the cryptocurrency as collateral, actually then to benefit from the market developments. Hopefully the market is positive, but there are a number of opportunities where you can actually apply the cryptocurrency as an asset that makes strategic treasury much more beneficial to the firm.
Very interesting, Carsten. You pointed out something which is also on my radar, saying that maybe you should and could purchase more Bitcoins than you can afford and then use it to securitize a loan. I think this is also interesting what's going on in this field. I think there are some early developments there, but from a treasury management perspective, I think this is still quite far away. But I really like this thought. So and here we can slowly recognize that I think treasury management merging with asset management and also doing, let's call it tricks like securing loans, will be a very exciting topic in the future, instead of simply moving money from one Euro bank account to another Euro bank account. That's the way how treasury is sometimes also understood. It's much more exciting, and probably it will be much more exciting. Last round for everybody, and then we unfortunately have to close this very interesting discussion. What do you think will be done by Michael Saylor next? Will he stop selling software? Will he try to get even more cash loans to purchase even more Bitcoin? Will he simply like morph into a pure Bitcoin hodl fund and basically potentially sell all kinds of other activities? What's going on next year? Because this guy is really fascinating when we're following what he has been done in the last month. So what do you think will be his next tactic? It's a little bit of a fun question, so you can be ironic here and people will not misunderstand it.
Well, I'll start with maybe a controversial one. I don't think it's going to go well for him in the future, because he hit a very fortunate time period where there was no other way for US investors to invest easily or get exposure via the public markets to crypto. But over the next 1-2 years, now with, for example, Coinbase being sort of a proxy asset for people to buy direct Bitcoin, they just buy the Coinbase share versus buying crypto. I mean, it doesn't correlate directly, but I think it'll get a lot easier for investors to get exposure to crypto, and MicroStrategy won't be the best risk-reward bet for that. So I don't think it'll be a long-term sustainable future.
I disagree with you on purpose, because everybody agrees today all the time, so it's boring. I think we might be surprised in the future what will come up with this guy, because I think he knows exactly what he wants to do, and he might come up with something we had no clue now today what he's having in his mind. I think I've purely speculation. I've never read about something, whatever, but I think we might be very surprised what will go on with this guy, because it's certainly other different ideas in his head.
Excellent.
I will also just...
Yes, Max, please.
Just a fun statement. I think he will next go into Ethereum and combine the Ethereum technology with his software business. And then you have a company. Then it was a very nice marketing gag to actually tell the people now our software is running on Ethereum.
Let's see what happens. Seamus and Carsten.
I think Max stole a bit of my thunder. I think Michael Saylor's hands are a bit tied until the price goes up. He's already leveraged. But I think the next bet is if it goes up, he'll leverage more. So I think we'll see more of the same. But maybe along the same lines as Max said, I think maybe the next big headline is not necessarily Michael Saylor, but who's the next Michael Saylor for Ethereum that comes out with the ESG compliant crypto path.
Absolutely interesting. Okay, last word to Carsten.
No, it's just everything has already been said. I'm just really also excited about who is going to be the next guy pushing up or bringing in the news and pushing a certain currency. And there will be turbulence in the market no matter what. So whatever happens, there will be turbulence in the market next year.
Excellent. That was a very interesting panel. I think, well, I have to say I also learned a lot, keeping my thoughts up to very high level. So thanks very much. And therefore, let's talk soon. And I'm also looking forward to Corona being resolved at some point of time, such that we then can also meet physically again later this year. Thanks much, and have a nice Thursday and also a very nice rest of the week.
Thanks.
Thanks, Philipp. Thanks, everybody.
Bye, guys. Bye-bye.
Have a good day. Bye-bye.
Thank you.